Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market. That is the stock market, the oil market, the crypto market, and any other market where we can hopefully make some or a lot of money on the internet. Load up discussion today. We've got Bitcoin moving higher, up to 71K, up 4%, with Brent moving higher, also back to almost $100. Still, both Brent and WTI almost down 10% each after the taco yesterday on oil, but we'll digest that a little bit more today. We'll talk HIP3 on HyperLiquid, open interest surging to record highs again. HyperLiquid out really performing very, very strongly. Thought it was worth putting in as a headline today to digest those numbers. Ryan will take us through that, and then I will talk OpenAI offering private equity firms a guaranteed minimum return of 17.5% and early access to non-public releases. Is this bullish? Is it a sign of desperation? We'll talk about that today in more detail. We've also got the latest on general price action and market thoughts as always, as well as the ongoing conflict and how we see that affecting the market as we move forward. So stay tuned for that. I'm delighted to say I've got Legendary and Rahim in the co-host seats with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment at all times. With that out of the way, Rahim, it's Tuesday, the 24th of March. How you doing, man?
GM, everybody. It's good to be here. I'm doing well, but yeah, the the world is it's just like such a big like roller coaster. It's hilarious to me at like some point. There's a particular screenshot I shared in the Modern Market chat yesterday, and it was like literally like the first. It was like 4 consecutive tweets by different social media channels. First one was US announces that we are doing a peace, like we are in talks with peace. Then Iran comes out saying there's no such conversation. Third tweet, what is Iran talking about? They're lying. And I was like, what is going on? And it's just like hilarious to me. Like, props to people who are like trading oil or whatever the hell that you are trading. Yes, of course, you can like keep an eye out on all these like random wallets. The Polymarket bets have been happening where people are banking on the idea of like the conflict ending end of March or whatever. But the fact that the world is running so much based on like random statements that you can't even authenticate, bless people who are like trading. I cannot for the life of me can even get myself to click buttons. I know how everyone else is doing it.
I mean, you're not the only one yesterday where I think there was absolute information saturation where it was that. I mean, I think maybe yesterday was one of the first days. I know it feels like this sometimes in general. Yesterday was one of the first days. The more online you were, the less you would know what was going on. It was impossible if you actually stand back. I know we broke a lot of the news yesterday on the show, and we were trying to analyze it live because it was coming through as we were live on the show. And I came to the conclusion yesterday, look, you can't tackle out of this kind of stuff, although the market has accepted at least some of it, right? Oil is trading, I think 9 to 10% lower, the two different types. But if you actually zoom out at the end of the day, once all of those messages that you just alluded to, Ryan, had kind of happened, taken place, it's very hard to know, to be any better informed. I still think my position probably is still that this is time buying, both on the military side and on the market side, right? Yields had got to an uncomfortable position, and that's usually the place where Trump likes to walk things back. That's still my kind of base case. But the information certainly doesn't help you get to that conclusion. Like, you have to wade through so much information. I think that's what is virtually impossible, but because of the barrage of information from all kinds of sources. And maybe one point on journalism in general at the moment that you have to be aware of as a consumer of information is that there's a lot of farming going on, including from sources, information sources which you might have previously trusted. There are accounts that have simply made it their business now to type in capital letters Trump says, and then just write down every single sentence that he says. They break down his speech and write down every single sentence that he says in capital letters. You can't process information in this way. You're not supposed to digest information in this way. Do you know what I mean, Ryan? Have you noticing this this uh, this style of even journalism at the moment?
Yeah, it's exactly what you're saying. I think everyone's like farming this because they're like, oh, like this is a good time to capitalize on the entire like situation. Like media outlets like no one has even heard about, or accounts that like no one even gave like a shit about, like all of a sudden are like the most educated accounts. And for someone like who lives in like the Middle East, it's just like, even me as like a person, I'm like, they're like random countries getting involved now. So like, Pakistan is like, they are mediating the conversation, but both the parties are like, no, that hasn't happened. So you're like, who do you trust, who do you not trust? And it's not even just like the news, like objectively, for example, like there was some sort of like an attack today on like Kuwait and stuff. So you're like, what is going on? How is it that on one end there was one argument that, okay, like there is like a misinformation, or there's just like too many different channels contradicting information, but then the objective data is also like very off. So at some point you're just like before I used to have this belief is like, you follow the money, you'll know what's happening and stuff. And to a degree, that's correct, right? We saw like people selling those oil futures yesterday before the announcements or whatever. But things go
Yeah.
back and forth so quick that you literally are sitting at like a coin flip of things.
Yeah, following the money, trying to understand people's incentives. I think that is the way to go in an environment which is so saturated. Ledge, checking in with you here. How are things your side? What's your response to this journalism question, the information barrage? What's your feeling?
Yeah, of course I notice it. It's everywhere. It's not only in the Middle East. It's with all kinds of reporting and all types of reporting, starting from the president himself, who very much loves to type in caps lock, and it is extending to all announcements. Maybe it has to do with our attention span getting shorter and shorter. Yesterday was such a great example of that, with Anthropic announcing a pretty cool new feature for Claude, which is you can now obviously use Dispatch, which is that thing that allows you to control your Claude from your phone. And they've been adding features and features to that. And yesterday I announced you can now also from your phone use Claude to control your Mac and tell it open this file, type something in the spreadsheet, search this on the internet, open the browser. And that went viral pretty quickly, right? Got 20 million views instantly almost. And my feed was full with people quote reposting that either in caps lock or in normal type, saying breaking, Claude killed OpenClaw. Like, they make such an interesting feature announcement and explain what you can do with that, and we digest it to something killed something, like not more than subject, verb, object. And I feel like this is happening with everything. And we've seen it yesterday on the show when we did the live research and tried to go to different live tickers and figure out what's Bloomberg, what's Financial Times posting, what are maybe Iranian media posting on that, what's happening on X. And once you arrive on X, everything is breaking, caps lock, and not more than like 4 or 5 words to follow that, because this is how the engagement farming works. And unfortunately, it's also extending more into traditional media as well. Because everyone wants the distribution, everyone's fighting for the same attention, right? You can read from so many sources, and it feels like that collectively we have decided that this is the best way to go about that, and farm like that, unfortunately.
Yeah, you got to be aware of it. You got to be aware of the information diet, And I mean, maybe one final take before we move into the main discussions for today is, how is it the case that Trump's always talking? Like, he's talking all day. He's talking at press conferences. He's talking on his airplane. Always got his door open, talking to the press, talking to the press, talking to the press. Like, what a strategy if you actually think about it. I think it's kind of ridiculous, but also maybe it's working. Maybe it's working. It keeps people engaged and or distracted. And so it keeps people engaged or distracted or guessing, depending on, and it keeps people hooked. It keeps people hooked on what he has to say.
I think it's a
Um,
brilliant strategy, to be honest. I think it's a brilliant strategy. Like, if you look at other politicians, you always like, you have this typical sentence of in many countries, oh, our politicians don't do anything. What are they doing? You never hear from them. That's like one thing you can't blame Trump of, is that he's not sharing what's on his mind. He's like constantly there. You can think whatever you want to think about him, but he's always here communicating and never gives you the impression that he's not doing anything, because he seems to be trying to win in the Middle East, go after Cuba, go after Venezuela, criticize the Democrats. Like, he seems to be doing everything at once and communicating about everything. And that per se is not a bad strategy at all. It's quite the opposite.
Yeah. It's like I can see the other side though, which is it's kind of the same thing any CEO or founder expresses, right? Like, how am I supposed to be on Twitter all the time? I've got to build the product. I've got to do the thing. I've got to make the decisions. You can't do both. So who's doing the other stuff unless he's delegated?
Someone else
Huh?
is doing it's the founder's funnel for politicians, right?
Yeah, exactly.
There's probably a stack of PR people around him that are on like high blood pressure pills constantly. Like, you just don't know what happens. And like they have like zero families, zero life, because like you can't, because you just don't know what tweet comes out, what damage control you have to do anywhere. He's like the biggest KOL out there.
He is. Probably an effective strategy at the moment. He managed to calm the markets yesterday, but Ledger's going to talk through how the various communications have affected the markets into today. So let's get into it. Ledger's going to break that down in a bit more detail, but I'll get you through the general updates first, starting with the price action. As always, we have Bitcoin more or less, moved up to around 71K. We've got ETH up a little bit as well to 2.1. We have XRP flat around $1.40. Sol is up 1% to $91. HyperLiquid's flat around 38.6. On the meme coin side of things, we have a green day, I think. Let's just get into the details there. We have, just waiting for this to load. Here we go. Doge is flat around 9 cents. Pepe, actually more or less flat as well. Trump is flat. Pengu is down 1%. SPX is down 4%. Fartcoin is down 6%. So a red day, bit of a correction compared to yesterday's green after Trump's communications. Getting into the headlines themselves, we'll be talking about first, Bitcoin moving higher to 71K, Brent and WTI oil moving higher as well, both still down around 8 to 10% though from yesterday's highs pre-market open. HIP3 open interest on HyperLiquid surges in the last 7 days, hitting all kinds of records. Rahim's going to touch in on what's going on HyperLiquid. And then finally, OpenAI is offering private equity firms a guaranteed minimum return of 17.5%, reported yesterday on X, and early access to non-public release. I'll talk through what I'm thinking about that and what some of the main reactions have been to this offering. In other news, get you up to speed, Backpack Exchange launches at 400 mil FDV and falls to settle at around 200 mil. New venture fund focused on prediction markets is launching with prominent investors from Kalshi and Polymarket. PowerFi announces a $125 million raise for a new crypto Web3 venture fund. Strategy announces a new $21 billion STRC ATM program. Bitminer buys another 65,000 ETH to bring its total holdings to 4.6 million ETH. Kalshi shared a blog post explaining new screening tools to block political candidates from trading their own elections. Legendary mentioned before, or I think Rahim, it was that there was some big trades going in on oil before the drawdown yesterday. I'm not sure what the final P&L was for that account, but I think it was large. Pudgy World officially announces launches on Amazon, where you can customize your penguin with exclusive digital traits. Vibes TCG Set 3 announced to go live in Q2 2026. That card collection will be pretty cool. And then a couple more things. Bouncer Labs to shut down after an exploit. And on the AI side, Anthropic launches ability for Claude to use your computer to complete tasks. Maybe another death blow for OpenClaw itself. So curious to hear people's thoughts on that. That is the roundup to get you up to with everything that you need to know in the space. Before we get into the main headlines today, Legendary first this time. What is catching your attention before we get into the main stuff?
Yeah, there's two things. The Anthropic one, I did talk about maybe one additional dimension to it. It's a great feature. It's pretty cool. It's interesting that Anthropic shows that they put a lot of value on that in their communication, because we said on the show that typically Anthropic is not communicating new features around Claude Code all the time. It's their employees. They go for this like founders funnel distributed, if you want to call it like that, where they have 3-4 employees who are posting new features. But this one specifically, they posted on their account because they deemed it to be that important. As you said, a lot of the timeline said, yes, this kills OpenClaw, this kills this kills that. And it also kills Mac Mini users, which I honestly don't think is the case, because it's actually making it way better. You don't want to have your laptop running up 24/7 your MacBook, and you can set this up on your Mac Mini. You can walk away and have your phone control your Mac Mini at all times, which is a great feature. And I think what it also shows is that the difficult question becomes, or the important question becomes more and more, what matters in a world where you ship a feature and the big AI labs can integrate it within a week, within a month, within 2 months, no matter what you're doing. And this integration works from Claude to Codex, vice versa, from OpenClaw to the labs, and vice versa as well. For example, Claude added this by the way feature where you can type /BTW, and while Claude is working, you can ask a question not interrupted. Like, you can ask a question, I don't know, it's working on a project for you, you can ask a question like, how's the weather in London today, or whatever is in your mind, or something project related. It's going to answer you in a separate track while not interrupting its work. This is something that OpenClaw introduced in their latest update yesterday as well. So what then remains the USP in a world where, especially AI related, everyone can copy everything from everyone? And I think it's the distribution that you have. In the case of the big AI labs, the amount of subscribers, or in the case of OpenClaw, the amount of contributors, because you are running the largest open source project in the world currently. But it's not easy if you are a new entrant in this market and you build something outstanding, because it can be absorbed, and then maybe like your hope or your lucky shot becomes that as part of whatever cool stuff or cool thing you build, that you as a person, as a founder of that, will be absorbed as well by Meta, by Anthropic. And that's also something we covered, how many like, let's call them micro acquisitions are going on, where founders with an early product get hired and acquired for maybe a couple mil.
Yeah, very cool. Very cool. I think, yes. I think for the average person, maybe you don't need to keep your laptop running or something. Sorry, it would be fine to keep your laptop running or something like that. You don't necessarily need the separate Mac Mini. But as you say, like this is at the margins, where the people who are doing the most are probably happy that they brought that extra power to keep it separate from the other stuff that they're doing. Okay. Ryan, what's catching? Sorry, Ledger, were you trying to come in on something else? The audio.
The other thing that I wanted to share real quick
Yep.
is what a brilliant idea that both the CEO of Kalshi and Polymarket are investing in the same prediction market VC. Obviously a very hot sector, and obviously if these two fierce competitors who are trying to outdo one another all the time and who's been able to raise at a higher valuation are coming together to have a fund where they're investing in purely prediction market related projects to show how important this sector is. What a brilliant move. Who's also on there is Mark Andreessen, unsurprisingly, Kyle Samani, who had left Multicoin Capital, which we talked about on the show, joined this fund as well as an LP. It is being founded by 2 early Kalshi employees. They're trying to raise 35 mil. And as you said, all of that is to be focused. 5cc Capital is the name, is to be focused around supporting infrastructure for prediction markets, which they see as a generational investment opportunity. And I just think from a storytelling and marketing perspective, it's absolutely brilliant that you have the 2 biggest competitors coming together to support the same fund, because the opportunity at hand is much larger than the individual company. So I like that a lot.
I think there's 2 things going on there. One, I think on some level, it makes sense to come together. They're catching a little bit of heat here at the moment, both on the maybe predominantly on the sports betting side. And so maybe if they come together to fund infra, I know they'll come together in a bigger way, but I get the sense that there's some ways that they can work together to kind of be stronger together against whatever kind of force is coming against them on the sports betting side. And I know this is a separate thing. Second thing is more of a question. What is prediction market infrastructure that is such a generational opportunity? The thing that I've noticed from talking to builders and chatting to people is that there's a lot of people who want to build kind of on top of Polymarket. So I'm just curious if that's your view, if that's where the opportunity is. Like, say, for example, you want to focus on a specific niche and then you create the overlay, just in the same way, for example, that HyperLiquid builder codes allow people to build on top of HyperLiquid. All the execution's getting done in the back by HyperLiquid, but you've created your front end. You own the customer at the front end side. Maybe you offer a few other things, but all the execution for the trading gets done on HyperLiquid. Is that the same? Is that what you mean by, or is that what you think is meant here by this fund raising to invest in people building more of that, or do you think it's other stuff?
They have shared some of that. So they said that they want to invest in roughly 20 companies over the next 2 years, and they want to focus on market makers, index designers, and infrastructure players. So I think it's exactly both of the things that you mentioned. And if you maybe take the step back and look at something like sports betting, where you have a plethora of adjacent businesses, analytics tools, all the things that you can buy to try to be a better sports bettor on the one hand, but here you also have still the liquidity issue. Like, big discussion on the timeline was, oh, Mega ETH is trading at 1.4 bill on HyperLiquid, whereas Polymarket has it way lower, because Polymarket, I think, has a condition in there that says TG until June 30th or July 31st, else it does not count. But there's a discrepancy. However, if you go into that market that is, I don't know, sub 800 mil FTV or whatever that was, and Routify had the post on that, it had what, 79K in volume. So liquidity is still a big issue in there. You have good liquidity for sports betting or sports predicting, and the political markets, the Fed rate cutting, which has 500 million total volume on Polymarket alone. But for the more individual ones, you need to make that attractive for market makers. And then for the bigger ones, if I think about infrastructure players coming on top of that, then it might be even interesting for some more traditional finance institutions, funds, etc., to see, can I use Polymarket as a more effective way to hedge a bet if I wanted to hedge one? And then you have the index designers to just come up with new products. So from all these things, I think you can add on top of that. And just the other remark that I want to make on what you said before in terms of Kalshi Polymarket catching more heat, there is currently a bipartisan bill which has been introduced yesterday by a pair of US senators. They introduced that bill to try to prohibit entities which are regulated by the Commodity Futures Trading Commission, by the CFTC, including prediction market exchanges Kalshi and Polymarket's US platform, from listing contracts related to sporting events, which is their big money maker. So you're absolutely right on that point, that coming together and trying to sway and swing regulation in their favor to be able to keep the sports predicting as part of the business offering is probably important to both of them, and makes sense to also appear to be a bit close, a bit more aligned on that issue as well. B, you are on mute.
The more I think about it, maybe they just need to do their lobbying. Maybe they haven't done their lobbying yet. That's maybe that's potentially one of the issues. Right. That's good on that section. Raheem, what's catching your attention around the markets? Before we get into the main stuff, we'll talk oil, we'll talk the stock market, we'll talk crypto in a second, but anything else catching your attention?
Yeah, there were a few things definitely on like some of the bits mentioned on the daily snapshot. Was I think the backpack exchange thing has been like just very interesting to me, and like interesting, I don't mean from a opportunity point of view, but it's just like they were a company that ended up acquiring the FTX arm for like Europe like a year and a half ago because they wanted exposure over there. In the UAE, they were like the first people ever to get like a VARA, which is like a virtual asset service provider license, which no one had. So they've obviously been focusing a lot on like providing assets, custodian services, things like that. You don't hear about them on like the timeline a lot. Don't know what their like customer base looks like. I don't know, it's not like Backpack is like a very known exchange in like the outer world. So it's just like very interesting to me. I'm not quite sure on like some of the decisions they take seem very strategic and like smart with their stock offering and the IPO news that came out, which relates to how like their token is locked until post IPO, I thought was an interesting mechanic as well. But seeing it open at like 400 FTV and drop to 200 for an exchange for a business that is bound to make money on volume was kind of like disappointing in like some ways. I thought that was like an interesting bit of news just to like keep out. The other thing is obviously like this the STRC thing. Like we spoke about the strategy STRC ecosystem about like 2 weeks ago, him announcing selling STRC and MicroStrategy again to have about $42 billion to buy Bitcoin more and more. It's crazy. Like I feel like people don't talk enough about like even if you look at the numbers, a Sailor bought 1,000 Bitcoin. So like he bought about like 75 million worth of that. You compare that to ETH, that's like 4.66 million ETH and stuff. Like it's just like the number that you see, it's almost like 10x the difference, and like this number is getting like wider and wider. So yeah, it's kind of nice to see of how doubling down Sailor has been when it comes to his like product and stuff. But yeah, that's definitely a few things that caught my eye today.
Interesting. I know what you mean with Backpack. One thing I would notice though in this type of market is there've been a number of launches recently which might start lower, and then move higher over a little bit of time. I think it's not the market that you can demand a multi-billion-dollar valuation and then work down from there. I don't think that is happening in this type of market. For example, we had the TRIA TGE. When was it? But it was about a month ago, maybe.
Yeah,
Month and a maybe end of January, start of February, or something like that. We had partnered with them, did some work with them, and it came out of the gate maybe 150 mil. They're obviously a crypto card company doing a lot of signing up a lot of new users, doing a lot of volume, and kind of came out of the gate 150, 200, dipped down for a bit, and has just slowly over time, over the last 2 months or so, in arguably a pretty difficult time, almost tripled. From what I can see, we've pulled the chart up here. It's trading at around 360 mil FDV. I think it spiked yesterday even further. So
to 480. Hit its, as you said, hit its lows, went under the 200 mil at 170 mil, went almost all the way to 480, or went to 480 mil yesterday, traded above 400 for a while, and is now settling at around 360 mil. It's technically up 135% over the last month.
yeah, so like, look, in a very, very difficult market, I think, and there's a discussion about mega ETH as well, for example, whether they obviously still need to get they need to hit their KPIs first before we can even think about what the token's going to trade at. But I think there's this kind of acceptance in the market now that you're going to have to start lower and build up from there after. So I don't know if that's necessarily a bad thing at the moment. I think in this kind of market, that might be the right way around. Do you have a view there, Ryan?
Yeah, I'm very much in line with that. I remember, and I believe we've discussed this on the show as well. I remember when me and Ovi, we were discussing the REC token last April during a token event. I remember at that point, like it was trading as low as like 15 mil. And like we were talking about it and it went up to like 200 mil and stuff. And I do think from a entry point of view, from an upside point of view, even from like a community standpoint, right? Like the more earlier people get in and the more winners you have, the more people talk about it, the more people like celebrate it, and vice versa. Like if you have a lot of the early people, whether it's NFT holders, whether it's like a bunch of like angel investors, if they start like losing money, they start talking negatively about like the protocol, then obviously the protocol is basically swimming against the current until unless it's like a fantastic one of a kind product, it becomes like really hard for them to like survive in the market. However, at the end of the day, if you are working on an ecosystem that's like, you have good buybacks, you have like an ecosystem that's making money and stuff, I completely agree. There's an argument to be made that way too many things launched at too high valuations. So maybe that's like the counter argument to exactly what you were saying.
Yeah. Okay. Fair point. Fair point. There is something I want to bring up, but I think it might connect to Legendary's asset roundup as he goes into a little bit of oil as well. So I'll bring that up after Ledge. Why don't you take us through what we need to know? Bitcoin and crypto still acting incredibly resiliently strong. Tell us why you think that's happening, and give us a bit of an update on the oil situation and any other bits of news that you think are relevant.
Yes, what a volatile day, what a volatile last 24 hours we experienced. But now we see Bitcoin holding firmly above 70K, even above 71K at the moment. ETH trading at 2.1K. Gold had a very interesting day too, or a very interesting last 7 days as it did go as low as 4.1K. Yesterday, we covered to 4.4K. We had the S&P 500, the Nasdaq closing up more than 1%. We had a massive recovery in the Euro stocks, the European stock index as well. And all of that happened after Trump did post yesterday that there's going to be a 5-day pause from strikes in Iran on energy facilities specifically, to which the market reacted very positively immediately. Then what happened is that Iran did deny that these conversations are happening. The markets did go a bit down in their enthusiasm. However, Trump then came out to say, no, they're talking to a relevant person. And this went on back and forth a bit. What also had happened is that oil did crash more than 10% in the day, but has now recovered, with Brent trading above $100 again. And what also has happened, that is according to the Kobesi letter, is that the US and Israel did strike new Iranian energy facilities, including a natural gas pipeline belonging to an Iranian power plant, which is something that Trump explicitly said they are not going to do over the next 5 days. And what we have in particular discussed is that Trump is being pressured a lot by rates. So looking at the 10-year yield, looking at the 20-year yield, we did go above 5% yesterday. Then you had this a post coming out which immediately helped lowering the 20-year treasury rate back down to 4.94 after it did go to 5.02. However, as it's now becoming more clear that it doesn't look like Iran and US are anywhere close to a peace deal, the rates did climb back up both for the 20-year and 10-year yield. At the same time, Japan's 10-year government bond yield has surged to 2% and 30 bips, 2.3%. 5-year yield also jumped to 1.72, which is the highest level, which is an even higher level that we've seen in the financial crisis in 2008, where it only, quote unquote, only did go to 2%. So the bond market is in a very, very tough spot right now. And Trump certainly did try to buy time with this. And it seems that this optimism carried over on the stock market, it carried over for cryptos. But the thing that's probably the most interesting one to him to keep rates in check, which is also where we did see him act last year during the tariff war, was mostly, if not even completely reversed over the last 24 hours. So he was not able to buy as much time as possible. One more thing I want to touch on the strength of Bitcoin in particular is this interesting chart, which is looking at the Bitcoin price, the S&P 500 index, since 2019 to 2026, so the last six point something years. And it's not only looking at the price action, it is also looking at the correlation coefficient to see, are the S&P and Bitcoin moving hand in hand? Is BTC decoupling from equities? And we had this decoupling period, which is this light red highlighted period in 2020, which was the longest one we had observed in the past. And now, since October 2025, where you did see that massive wipeout in crypto, where Bitcoin corrected heavily before stocks did, we are now in what is the longest period of time since, even longer, since 2020, where we are seeing BTC price and the S&P 500 index decoupling. the argument or some of the thoughts from people who were looking at that and analysts were to say that BTC simply in October started to react a bit earlier to macro conditions which also exist for stocks, and that liquidation cascade just contributed to that. But what is also now happening at the same time is that while the S&P is extremely scared, the stock market sentiment is in extreme fear, and it's very, very sensitive to whatever Trump is posting. Yesterday, we did say initially when he posted that there's going to be this fire pause plus the peace negotiations are going very well. We did see that the initial reaction of the S&P and Nasdaq was to be up 2.6%, ended up quote unquote only being up more than 1%, and BTC was up 4% on that news as well, but also then corrected down a bit. So it does seem that there's like more trust and a bit more resilience in crypto than there currently is in stocks. And if you look at both the fear and greed indicators for the crypto market on CoinMarketCap and the stocks one, the sentiment is a more positive one for crypto because CNN has the pre-markets at 16, which is extreme fear, while CoinMarketCap is at 34, which technically still is fear, but it's a way, way better sentiment, or less fear is maybe the correct way to put that, than it is for equities. So very, very interesting picture to look at, in my opinion.
It is an interesting picture. I think there's a few things that people are starting to observe. I'll bring in a few points here. First, Citrini tweeted 15 hours ago, I can't be the only one noticing the seeming diminishing returns of Attaco. I think that's illustrated best, Legendary, by you sharing those yields, right? The yield, which Trump is the US 20-year here, going down almost in a straight line yesterday, when Trump kind of made his overtures, and then over time working its way back up as the market basically digests the reality of the situation. As you said, I think there was allegedly some, there's no official ceasefire in place, but they said they're not going to attack energy infrastructure or maybe civilian areas and things to do with power and energy, basically. But there were still other attacks taking place. I think both Israel have done attacks on Tehran. Tehran has done attacks on Israel and the Gulf states in a continued way. So it's by no means. So I think the view that we came to yesterday has kind of been vindicated, which is a buying tactic, a time buying tactic, both on the military side and on the market side. Although, as we're seeing, what is the return from it? Is there going to be another one today because the yields have gone up again? Are they going to have to do another one in another couple of days? Oil, however, didn't really go back to where it was. So, I mean, although there's a diminishing return maybe on the yield side, oil has kind of held around, what is this? I mean, oil was up towards $98, $99 yesterday on the WTI, and Brent was, I think, pushing towards 110. So they're both down around 10% from yesterday, pre-market. So there is that, and that's kind of become the default position for now. So, is that enough? Probably not, because I still think 90 is pretty high for where they would like it to be. But the point is, continuing the conflict is not going to get it any lower. So I think there's that point about this diminishing return, and maybe linking to your point about Bitcoin and the strength of crypto. I think I kind of was speaking towards the idea that where is this money? If you think about where this money is, and when people are going to say to Iran's money at the moment, and maybe even a lot of other people's money, it's been a very volatile period of time, and you can see why getting out of traditional rails can be pretty important. And I think this was started back when the US sanctioned Russia as it related to Ukraine, started seizing some assets and freezing assets. And now, when the dollar's been weaponized in that way, you can see why this is the next generation of that type of conflict, where maybe crypto rails is one of the best places. I know Tehran had suggested that the shipping through the strait should take the payment should take place in the yuan, the Chinese currency, but maybe at least a portion you would want to go into crypto. I'm very open to the idea that this could be being used on a bigger stage now, because you need to exit the traditional system and figure out a way for your money to be a bit more resilient and not be held by other people. Les, do you have a view there? And be curious to get Raheem's thoughts.
Yeah, I think that is a good point, and I also think that the weakness of gold is certainly helping Bitcoin as well. And you put that beautifully with that concept of you buy gold when you worry about the future, but you sell it when you worry about the present. And money still has to go somewhere. And ultimately, it doesn't take too much money to move Bitcoin, right? It takes way more money to move the S&P. And if you just have a couple whales accumulating and thinking, okay, this is a situation where I want to have more BTC at hand, and then that move also had been initially supported by the buying in the ETFs, then it's probably an easier feature for Bitcoin to recover than it is for gold or than it is for the S&P. And there's definitely some strength outside of the ETF buying, because on the one hand, yesterday we did see inflows to the tune of 167 mil into the ETFs, but our reported the streak that we had reported at the start of last week of 8+ days of green inflows had been cut and had been interrupted, because we did see 3 days of outflows again, but yet BTC only went under 70K for a quick period of time. So I do think that there's some extra whale buying power going on, and it doesn't take too much to support that price level ultimately.
Okay. Brian, what's your view?
I'm glad we're talking about this on the show, and I hope this gets clipped, and maybe sometime, like, this will be part of like the history of like crypto that we talk about this. I'm very much aligned with this like direction of thought, because I mean, on a broader scale, this is what like Satoshi's vision was always, right? Is like build a financial rail that's like decoupled from like the socioeconomic ecosystems that like function in the world. And maybe it's exactly to your point that when you start like looking at that, oh, there are freezing of assets and there are like sanctions and people are not able to like move money left and right, that maybe like, if we have to believe, if you think about how all the actions that Richard Nixon took in 1970s, which ended up turning gold into what it is today, and like over time how it became like a hedge against like inflation, there have to be certain periods in time that essentially contributed to this becoming like a thing. And I would like to believe that 10, 15, 20 years from now, like if Bitcoin ever becomes like this complete financial rail that is completely decoupled from all of this, that if we were to talk about an instance that contributed to that vision, it definitely would be this. Even from having personal conversations, if you've met like people from like Lebanon, so there's a massive adoption of like stablecoin infrastructure in like Lebanon and Turkey for many years ago, because they've understood like how like the currency has fallen. They've always been like pro crypto, understanding how movement of capital in times of need and stuff is like so important. And when that starts leaking out to like the rest of the world, and then you have like people having assets, they're not able to get access to their assets or sell their assets, it starts like speaking volume to maybe these ecosystems are where it's at. There's also a conversation to be had, and of course, like without getting into like politics, but there is like a scenario where I feel like in the future a lot of Middle Eastern countries, God knows where like the resolution of this conflict is going, where a lot of Middle Eastern countries, they're like, maybe we don't want to invest as much in like the West. We want to find different assets. Now, this could be gold, this could be like different assets, but maybe crypto ends up being like that other asset where they're like, okay, you know what? Like there's no other country that's holding it, XYZ. We want to get exposure to futuristic tech, futuristic like financial raise without having to invest in a country, whether it's Russia, whether it's China or US, that we don't politically align with, but still having that financial upside. And I could totally see maybe those narratives playing out at some point in time.
Yeah, the only caveat to this is, so I like these ideas. These ideas hold up. The only caveat to this is that Bitcoin has become increasingly adopted by the Trump administration and America. It's been kind of, it entered into the political conversation. And so to what extent can even that be seen as neutral when the current administration is so pro? That is the question mark for me. I still don't think that necessarily means that people can't use the rails to move things around, and get out of the stable coins even, because sometimes you might need to get out of stable coins if you're, stable coins can be frozen. So, and this is the kind of world where maybe different significant parties might feel the pressure to get out of the dollar ecosystem entirely. Okay, so look, that's our view there. I still think, just to put this out there again, oil, I think, is still going to go higher because already the damage is done, in my opinion. I think economies are going to get hit pretty hard from what the backup in oil, the demand that is not being met, and so I'm still lean bearish here. And I think the diminishing returns thing on the taco is kind of a real thing, even if go on, Ledge.
No, just go on. I have a question for you after that.
Even if there's a bit of, the market's pumped yesterday, I still lean towards being negative. Go on, ask a question, then we move on.
Are you trading this right now? Are you long oil? Are you shorting equities, or are you
still short Nvidia, still long oil? Added to it on the dip yesterday. It's obviously dangerous, right? Like, this is not this. Remember, when we've kind of said this on the show a bunch of times before, if we broadly risked off from the summer onwards last year, which was one of the best decisions we could have possibly done. Now, my view is I still like practicing. I still like trading. I still like trying to put myself in good positions. And so I'm going to take a proportion of what we made and play. Like, I'm going to play. I'm going to try to participate in the markets, which I think the most volume is moving towards. Try to independently assess the facts on the ground to the best of our ability. Obviously, we said there's a lot of noise, but where there's a lot of noise and a lot of action, there's going to be volatility, which is good if you can pick the right direction. So it's even more volatile because of the nature of the conflict, because of the particular administration that is orchestrating some of these moves and being so self-conscious of their power to move the markets via tweets and commentary. So look, it's not an easy one to play, but yes, I am playing those. Those are my general positions. I think I'm short the Korean market as well, because I think they get worse hit from the oil situation. So yeah, generally long oil and therefore short other stuff, because I think the oil situation is going to cause some destruction generally. And I have a large energy related equity holdings, but apart from that, it's mostly de-risked now. So that's my view. What about you?
way less trading than you at the moment? Way less trading. Mostly de-risk too. Still holding all of my global indices because they're long-term holds. Did add a bit of gold on that dip though, not oil. But apart from that, not really entertaining this volatility at the moment.
Fair enough. Okay, good conversation, attacking the questions or the topics from a few different directions here. We don't have much longer today. We've got about 6 minutes left. So Ryan, why don't you rattle through this HyperLiquid news? I think some cool stats coming out, very, very impressive. Then I'll touch on this OpenAI thing, which I think is maybe emblematic of the situation we're in as well, more broadly. Ryan.
So if you guys remember last week, very same time, we were talking about how the HIP3 daily volumes have been like skyrocketing. Last week we had about $1.8 billion. Today we are sitting at 5.93 at an all-time high. We've obviously had conversations from HyperLiquid mentions in Wall Street Journal, CNBC. So a lot of like traditional financial markets and media outlets have been like talking about it. I think it's become predominantly like very obvious that a lot of political decisions and discussions have started happening on weekends, and more of like traditional financial rails have started like looking into finding ways where they can trade these markets when it comes to oil, gold, and silver. We obviously saw a massive spike when silver trading began in January, but the oil trading has absolutely like mooned Hyperliquid's ecosystem, where about like 45 to 46% of the trades that are happening on Hyperliquid are completely focused on like HIP3. And this is like, it's interesting on like a couple of fronts. It's like very interesting for Hyperliquid as like a revenue generating ecosystem, because they've built out these like third party contracts where they're ranging about making $100 million for average revenue. And this is whilst the fees on their HIP3 protocol has been reduced to like 90%. So they're making a lot of money through builder codes, which goes back to our earlier conversation talking about even when it comes to like prediction markets, because all these ecosystems rely on like liquidity. And for whether it's wallets, whether it's like bots, whether it's other platforms, instead of them having to build their own ecosystems, they can plug into Hyperliquid. So Hyperliquid makes a chunk of money on providing like builder codes, and both parties make like a fee structure ecosystem based on all like the trades they have. Super bullish on everything happening on Hyperliquid. We obviously saw all these like partnerships announced, especially with the integration of like Trade XYZ and all of the equities that you're able to trade from like oil. You have like stock trading going on. You have Brent, gold, silver. All in all, super bullish for Hyperliquid as an ecosystem. And yeah, definitely like looking to stack up more and more of like Hyperliquid over time, to be honest. I'm more bullish on Hyperliquid for at least like 6 to 8 months than even like Bitcoin.
Yeah, I mean, I remember me and you had this specific conversation, right, not long ago, where I started to articulate this general thesis, which is like, I don't even know. Look, I still think Bitcoin can go up. I think it will go up again. But Hyperliquid as a product is just unbelievable. It's so good. If you just realize what's happened, and I think sometimes when you're in the middle of it, you can't quite absorb the reality of the situation. Metals came online to Hyperliquid and attracted so much attention. Then another huge thing in the world happened where oil has become the center of attention, and that has also increased Hyperliquid's attention and volume hugely. This is now the venue. I don't know, it talks about the vision of being the house of finance, but it is the venue where you come to trade the thing, whatever it is. It doesn't need to even be crypto anymore. It can be, if Bitcoin 3x's again and crypto goes into a humongous bull market, that's where you'll do it. If it's metals, we've been through that cycle now where silver and gold were at the top of the volume boards. It's done that. It's got that experience. Then it was oil. Whatever it wants to be next, whether we're going to get wheat and corn on Hyperliquid soon, if that market's going to move, which I think it is going to, then we'll get that up there, and then that will be the top. And it's just proving to be the place where you are going to trade the thing. Whatever is the hottest thing, that will be the place that you trade it. Sure, other places will exist too, but it's showing itself as a fantastic venue to be able to house all of that. So my prediction for it, why it's a very comfy hold for me now, even though, look, if equities turn over, by the way, I still think everything can take another gap down. It really depends on equities. I don't think Bitcoin can survive in strength if equities go down 20%. I think everything will move lower. However, I'm kind of comfy with the Hyperliquid hold because I'm just thinking through to the future. It's like, look, this is going to be, irrespective of what's going on, this is going to be the place where you trade a lot of stuff. And that's not even taking into account with one eye on HIP4, right? I keep mentioning this. The outcome markets, or their version of prediction markets, if it's anything like HIP3, then that could be a potentially humongous unlock, which definitely no one is thinking about as things stand. So I like it. I like the data points that we're seeing from there, and even this model where they allow other people to build on top. Right on the screen, we've got Trade XYZ doing the majority of the volume, building on top. We've got Dreamcash, which is the mobile option by Selene and Tether. You've got Hyena, Felix, Kinetic, Ventures, all kind of carving out their own markets, deploying different types of assets and capturing different amounts of volume. So interesting model, and I think that it is unequivocally working. So any response to that?
Yes, one thing I want to add to that, because I tried to conceptualize how relevant is this trading volume compared to the rest of the world. So I looked at Trade XYZ and I looked at Brent, and I looked at crude, and I was like, okay, this is $1.7 billion in trading volume. Then I tried to find out what is happening outside of that. And WTI crude oil futures trade roughly 116,000 contracts. Brent crude trades roughly 180,000 contracts a day. Now, 100,000 contracts is 100 million barrels of oil. So 100 million barrels of oil is $10 billion at a oil price of, let's assume it's $100, which it is, where it is right now roughly. So that's the future trading volume is roughly 30 bill a day. And Trade XYZ, HIP3 then also as an extension, trades 1.7 bill a day. That's 5% of the entire trading volume in futures, which is being done on chain, which is an insane number.
Yes, appreciate you bringing in that context there. I think it's super helpful to get a sense of how much they're taking of the overall pie. I don't know if they're super worried about that or if that's a key metric for them, but it is interesting to note. And I guess the bet is moving forward, it takes more of that pie as well as creating more pies as it adds more assets. And I'm sure someone's going to bring spot equity. When they bring spot equities onto this thing, I don't know how they'll do it, but I think things are going to fly. In fact, Felix, I know, are working on spot equities. So let's see. Okay, final headline. We're running a little bit over today, but final headline to get you up to speed with what you need to know. This is the news that OpenAI are offering private equity firms a guaranteed minimum return of 17.5%, as well as early access to models not yet released. This was reported in Reuters yesterday. They say ChatGPT maker OpenAI is offering private equity firms a sweeter deal than rival Anthropic, as both artificial intelligence companies court buyout firms to form joint ventures aimed at raising fresh capital and accelerating the adoption of enterprise AI products. OpenAI is offering private equity firms a guaranteed minimum return of 17.5%. Significantly higher than typical preferred instruments, two people familiar said. It's also offering early access to its newest AI models as it seeks to enlist like TPG and Advent for its joint venture, three sources said. So I have some takeaways from this. I want to take you through some prominent people's takeaways first. Chamath, prominent investor, one of the co-hosts of the All In podcast, said, "What? Huh? I'd like $5 billion, please, because it sounds like a deal that is too good to be true." 17.5% is outrageous, right? Get maybe as much of that as you can. However, a couple of more nuanced points on this. I like this take from Darren, who is someone I follow quite closely. He said, "In isolation, I think an OpenAI private equity strategy could be a creative approach to B2B, but at 17.5%, OpenAI is approaching credit card rates, while Google is selling 100-year bonds at 6.125%. I feel like we're seeing a constellation of liquidity issues forming here. And that's my issue with it. I think this is like when a crypto, and I know we like to compare things to crypto because we have significant experience of ballooning rates sometimes. This is like when a protocol really, really, really wants you to stake or really, really wants to attract you. And sure, there's some like baseline rate that you could earn if they did everything safely and everything was secure and everything was normal in a normal market. But the competition is so fierce, liquidity is so scarce, it must get it from you. And maybe they're going to take some risks on their side too, that they have to offer you an obscene number. And to me, my antennas go off a little bit when you hear a number like 17.5%. This is very, very high. And it makes me question the underlying state of the market if they can't offer a normal rate and think that they can raise the money. Clearly, they do not think, OpenAI does not think they can offer 6% or 8% or 10 and raise the amount of money that they would like to earn. And then you'd have to ask your question, well, why are the smart people in the room not giving you the money when you would tell them that they can earn 6 or 8 or 10%? Why do you have to go to 17.5%? It's in OpenAI's interest to keep that number as low as possible, right? So I think this is a big, would I say red flag, yellow flag? This is a yellow card. I think, I mean, that's my position, right? Like my position is that there's liquidity issues in general. There seems to be no more appetite to buy these stocks at the higher prices. It feels like there's exhaustion in the market in general, as at the same time as we're having this oil issue now. So I think this is another instance of that. They've already had billions of dollars plowed into them. And you had Nvidia say, right, we're going to do 100 billion to OpenAI. Oh no, actually, we're just going to reduce it to 40 now, or I can't remember the exact number. They reduced the number. So it's like everyone's trying to claw back some of their capital commitments now. And I think this is another example of it, guys. Curious for your thoughts before we close out here. Ledge then, Ryan.
I'm a bit split on this. On the one hand, I don't think you can offer 6 to 8% or even 10% to venture capitalists when the stock market, the index returns 8%, 7, 8% on average, because then we're like, okay, I'm just going to put in the S&P 500. Thank you very much. That is the guaranteed return. 17, however, is very, very high. And the post I liked most about that was Alex Svanovic's, the Nansen founder, who said, we are at the Terra Luna stage of OpenAI because Do Kwon back with Terra Luna did offer, what was it, 20% yield on UST, and that did collapse. So I get it where you can't do 6, 8, or 10%, but 17.5% seems a very high offer at this valuation already. And of course, if you look at the NASDAQ over the last years, that did very, very well. And tech had massive appreciation, but it's still, even at the size that OpenAI has, a crazy offer to try to guarantee that return. And it's a bit worrying.
I think so. Rahim, what's your view as we close out?
Yeah, I think I'm on both the sides as well. Like, I think there's like a world where I see maybe they want certain VCs getting along to basically have some sort of like footing when a lot of legislature and like lawmaking stuff that comes to AI. Because I think this is like, to me, it's one again like that big gray cloud that's like above like prediction markets. It's very similar. There is a lot of legal ramifications that are going to be coming at all of these like companies, and just like OpenAI when the whole Anthropic Pentagon deal fell through when they came in. So maybe this is their way of like getting certain ecosystems to have like a better backing from a quality standpoint, but not like a quantity standpoint. But I completely side with what you're saying, which is like, if they're not able to like raise at like lower, that's crazy that they have to offer 17.5, which goes into your thesis of like short Nvidia or like overall, you know.
Yeah.
The only thing that I would add to that, where it probably is a bit more nuance is helpful, is to understand that there's a difference between offering that return as a preference return or a guaranteed return. And for a preference return, that would mean that this is associated with that specific investment. It's backed and is not backed by OpenAI's overall cash flows, assets, or equity. So it is not guaranteed in the sense that OpenAI will sell and divest everything that they have and use all of their cash flows to fulfill that. So that is maybe a bit of a mitigating factor, but it's still worrying in my opinion nonetheless.
Okay. Fair enough. I think we discussed that from the different angles required. Guys, good show. Good show. Robust discussion. I think there it is. That's our show for the day. Just remind you, every single day, Monday to Friday, 7 a.m. Eastern Time, live on X Video, YouTube, and you can catch us on Apple and Spotify as well. We will be back same time, same place tomorrow, Wednesday, the 25th of March. We hope you have a wonderful rest of your day. See you tomorrow. Bye-bye.